Hello, guys. My name is Joseph Ejike Oji, and I'm here to keep you company again. Tonight, I'm going to teach you, well, let me put it this way. I want to talk to you about a concept that is called rear view investing. I will begin by sharing my screen with you, and then we go from there. Okay? Yeah, I think by now you have access, you can see the screen very clearly. Okay, let's begin. Rearview investing and the roads, the risky road ahead. So, what is rearview investing? I will start by uh, going step by step. Let me put it this way. Again, let me make sure you are seeing this. Okay, good. Let me put it this way. In a perfect world, figuring out stock prices could be simple. You will just look at the money a company promises to pay you, like earnings and dividends. Then you use interest rates and risk levels to calculate how much that money is worth today. But the real world is full of surprises. That's the problem. And this make this kind of prediction very tricky. Even so, financial experts still use a version of this method called the discounted cash flow model to understand how expensive or cheap a stock really is. So one key tool is the price earning ratio. I discussed some of this a lot in my finance classes. Now, simply put, if the price earning ratio is high, it usually means lower future returns. And if it is low, returns are expected to be higher. So this information can help investors to decide how much to save and where to put their money. Now, let us turn our attention to investing in the rear view. In plain terms, many people ignore the logic completely. The logic about the price earning ratio and other information that I discussed in the previous slide. Many people ignore them completely. Regular investors often don't look ahead, they look behind. So instead of asking what will happen, they assume that the past will repeat itself. That is what I call rear view mirror investing. Now, if stocks have gone up recently, these investors think they will keep going up. That kind of thinking actually worked well for most of the time since 2009. Stock prices and the price earning ratios both went up through the 2010s. Even when the market crashed in 2022, prices bounced back quickly. And this made people to believe that any dip was just a chance to buy more, which it is not. So the bottom line is clear. Experts can also go wrong. They can also get it wrong. Also, another bottom line is this. The way of thinking or behaving that I call rear view mirror investing isn't just common among everyday investors. Even professional analysts and traders fall into the same trap. Many forecast company earnings by repeating past numbers, even though research shows that past growth often doesn't predict future results. For example, Goldman Sachs found that currency traders using past volatility to forecast future market swings got it wrong over the past year. They failed to see how changing economies and global events would impact prices. So this is the main danger of looking backward in investing. That's the main danger. If it works, let me put it as simple as I can. It works fine until it doesn't work. It works fine until it doesn't. People thought the dot-com boom in the 1990s and the 2021 stock surge would last forever. Then came the crashes. Forward-looking data actually warns of trouble, but investors ignored it completely. The truth is clear. Rearview investing feels smartest right after it works. But if that success is only because stock prices rose and not because of actual value, it is a warning sign. And then the wind shifts. Let me put it this way. When the wind shifts, those who fly by yesterday's map crash into tomorrow's wall. That is an adage I want to use to, make it more clearer. So that's the position of the American investors are in now. Rearview investing. So it is the position of American investors now. And the problem is that it may be time to stop staring at the mirror and start watching the road. That is my advice, actually. It is time to stop staring at the mirror. I mean, when I say mirror, I mean the rear view mirror, and start watching the road when it comes to investing. So guys, I hope you enjoy my lecture tonight. It is brief, and I just want to show you to avoid rear view investing and look ahead. Thank you for watching, and I will see you in my next video. Bye-bye.